Hello, my name is Tim Gregory. I'm from Vermeer Investment Management based in the UK, where I'm a senior fund manager. Hope everyone is doing well and managing to stay safe at this extraordinarily difficult and challenging time. Today, I was going to focus attention on housing and infrastructure, particularly in the US, where it's been a surprise to many of us just how robust and solid the housing market has performed in recent months. As we entered the economic lockdown and we all faced a very uncertain future in the late first quarter and the early part of the second quarter, it was very uncertain how housing would react to that. But for a number of reasons, actually, the housing market has performed well. One of the key reasons for this is, of course, very low mortgage rates, as interest rates have been very suppressed and cut even further, and bond yields have reacted to that, enabling investors to lock in to interest rates that are very attractive to borrow money to finance a housing purchase. But in addition to this, it's also been noticeable that many people have chosen this moment to actually move out of cities and look to find housing in more rural and outside of city areas. And this is clearly a function of the uncertainty that's been created by the COVID-19 pandemic. Many people, of course, face a future working from home. And although this is rather transient at the moment and no one knows how long it's going to go on for, it would appear that people have made a decision that they want to work from home more and they want to have space. And this has helped drive investment in housing up. And it's also worth noting that the housing market prior to the pandemic was starting to do better. Interest rates were already very low, and there's been a long period of low housing formation as people have stayed at home longer. But this appears to be changing, and we're definitely seeing a significant improvement in the housing market. And many other industries, of course, have benefited from this, whether it be the home improvement retailers, gardening related businesses, or infrastructure companies. They all are benefits of a strong housing market. And as we go forward, we also know that from an infrastructure perspective, it's government policy, whether the Democrats or Republicans are elected, to continue to focus on stimulus for the economy that helps rebuild the infrastructure of the US. But actually, this is not the only infrastructure that is going to continue to be invested in. We should also think of the digital transformation that's going on and the infrastructure that is required from that. This colossal investment that is being made in rolling out 5G, not just for communications, but also in the future for enterprise and for what is going to be a significantly even greater digital future that we're all going to see going forward. So there's a lot of investment going into those areas, and it's noteworthy, I think, that in Europe, where finally a significant economic stimulus package has been approved, we would anticipate that not only is there going to be significant investment in environment and green related issues, which is very important going forward, but we expect Europe to use this opportunity to improve their digital infrastructure, which is so far behind countries like the USA and China. And this should lead to some considerable investment, which will help growth going forward in the future. So a lot of areas of interest, housing doing much better than expected, and we expect continued investment in infrastructure, both physical infrastructure for housing, roads, bridges, schools, but also the digital infrastructure, which has been transformed by this very uncertain time. Thanks very much for your time today.